intraday traders. The U.S. stock market and the ICE U.S. dollar index ended last week higher. U.S. markets ended lower on Monday with losses in technology stocks, undermining investor confidence second session in a row. The dollar slipped despite a three-day strike of rising treasury yields. U.S. stocks ended at record highs on Tuesday. S&P 500 and the ICE dollar index ended lower on Wednesday after the Federal Reserve raised the federal funds rate. The Fed hiked rates to between 1% and 1.25%, and Fed Chair Janet Yellen said she still expects inflation to hit 2% target next year. Data earlier in the day showed the headline inflation slowed to 1.9% in May from a 5-year high of 2.7% in February. The central bank indicated no change in plans for one additional rate hike in 2017, while it will start to shrink gradually its $4.5 trillion balance sheet this year. The U.S. stock market closed lower on Thursday while the dollar rebounded. The Bank of England left its key interest rate at 0.25%, leaving unchanged also the size of its asset purchase program at £435 billion. Monetary Policy Committee decision was widely anticipated, but the 5-3 vote showed two more BOE members voted for a rate hike after just one vote in May. The Swiss National Bank kept its deposit rate at -0.75%. U.S. housing starts data were negative on Friday. The stock market closed higher. The yen slumped to two-week lows against the dollar on Friday after the Bank of Japan kept a short-term interest rate at -0.1% and signaled it was in no hurry to follow the Federal Reserve in tightening its monetary policy. The S&P 500 ended the week 0.1% higher, while the U.S. dollar index slipped 0.16% for the week. This week will be light for economic data. FOMC members Fisher and Evans will speak on Tuesday. The Reserve Bank of New Zealand meets on Wednesday. The RBNZ is expected to keep key interest rate at 1.75%. Happy trading and see you next week.